an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Hi, uh, I hope you can hear me. Can someone just put a note in the question box if you can hear me? Oh, good, excellent. So I guess it was an error on my part. Thank you so much. Um, we've lost a few people, but I guess I need to restart again. I'm just going to send a message to everyone that we are restarting. So can you hold on, please? Just give me a moment and then I'll be back with you guys. Just give me a moment. Okay. Um, okay, all good. We can start now. Okay, we're going to talk about how to audit a super fund who have invested in cryptocurrencies. And I'm just going to skip through the introduction part of it so that we can catch up to some lost time. Now, uh, just to let you know, this is a declaration that this presentation is um, for educational purposes only. I'm going to talk about cryptocurrencies, and now the copy of this presentation can be downloaded from the handout section. So if you want, you can have a look at your panel and then download this presentation. So what we're talking about is this investment gold or because it's all digital, so we need to be aware of what we are getting into. The beauty has been that uh, for some investors, this investment has given exceptional returns. In 2016, it was 123%, whereas in 2017, depending at what price you bought it at, some people have actually grown in value by 600 and 700 percent. And we have noticed that self-managed super fund are investing in cryptocurrencies. Actually, sometime in mid of 2017 in trustdeed, we were setting up or we were selling to financial planners about 20 to 30 self-managed super funds per day, which was very good for the business. But I was quite wary of where this is leading us, and worried that many auditors would have to audit these funds. So, so hence this presentation. Now, one thing you have to note that cryptocurrencies are not regulated. It's basically a barter system without any borders, and audit of super funds will really have to be very conservative. You really need to know all the aspects of what is really involved. Some of you may not even know what a cryptocurrency is, or they would have not encountered a fund as yet which has invested in cryptocurrency, and it's quite possible that you may not audit a fund which has invested in cryptocurrencies. But there are certain challenges which are ahead of us, and that's what we're going to talk about on how to manage those issues. Now, there was a problem with GFC some years back where there were assets which were good assets and they lost money and they lost value. And because of that fear, the cryptocurrencies has taken a flavor because it's not regulated. It's outside the banking system. It's outside the traditional investment forums. So people think that it's always going to happen in the future. So this could be something which is new and which will stay on. So there has been a huge growth, especially after GFC. Now, we must understand what is cryptocurrencies, how to open an account. As an auditor, we must familiarize ourselves with this new asset type. Now, there are certain secrets on how it was developed and what is this blockchain, and how is it publicly viewable, and how this ledger is displayed, and how you as an auditor can actually check it out. One thing you must note that as far as any cryptocurrency is concerned, for bitcoins, there are only 25 million coins out there. So there has been a limited, the people who have actually promoted any particular cryptocurrencies actually limited the circulation so that there's a constant demand, and it's marketed as if it's a currency or as if it's gold. And the way it's there's been a lot of deception and a lot of illegal activity, because for payment for drugs or payment for arms, people have used this sort of method instead of using normal banking channels. Now, the market capitalization is quite large, $200 billion, but it keeps on changing depending on the value of Bitcoin alone itself, and there are other cryptocurrencies as well. But for some people, it has generated huge profits, and that has led self-managed super funds investing in these assets. Now, uh, there's it's said that there's a guy called Satoshi Nakamoto who has invented this blockchain, but it's quite a secret on what is a blockchain and how it was, brought into uh, effect, and how people started, opening various exchanges where they were holding this data. Now, this data, or this blockchain, as we call it, is quite a good technology, and it's very similar to Google Drive. But in Google Drive, what happens is Google is hosting that Excel sheet. So instead of one entity holding the Excel sheet, there are multiple millions of computers who hold this ledger system, and as soon as there is a transaction, every 10 minutes, they make a block of the number of transactions, and it gets recorded in each and every Excel sheet. And all these updates are happening in real time. It's all identical data in all the computers. So it's a fantastic system as far as recording and mass distributing one ledger to everyone. And for that, we need speed, and various internet service providers are hosting it, and all the exchanges have very high internet connection, so that every 10 minutes these transactions get recorded. And it is said it's uncorruptible, and once the transaction gets recorded, it is time stamped. So once you put a time stamp on it, those transactions are irreversible. So they are set in stone. So when these transactions happen, let's say you want to buy a Bitcoin, so the moment you buy it, they look at the next 10 minutes, and then they put it as a block, and that block then gets stamped, and that block actually gets updated in everybody's machine all over the world. So we're talking about a technology, a software which is, you are hooking onto, and that software actually is recording these transactions. The beauty about this system is these blocks cannot be controlled by anyone. So the system, the software, it is so open that once these transactions happen and that period passes the 10 minutes, the block is automatically created and recorded. So it's a decentralized system, and because this transaction has happened, it gets stamped and it gets recorded, and there's a block number, and then the digital number of that block number is like um, recorded forever, and it's quite easy to trace. It's just that the number of transactions are quite a few. I'm talking about millions of transactions, buying and selling per 10 minutes. So every 10 minutes you may have a million transactions, and they get blocked and recorded and updated in a ledger system. So it's quite a fantastic system. To register yourself, you need a wallet. Wallet is basically a software program which you can download, and your wallet will have a public key and a private key. And public key is, you can give your public key to anyone, and that's how you receive the money. But when you want to pay anyone, when you want to sell your cryptocurrency, you actually need your private key, and they both are linked to each other. So, and private key can become a public key, but you cannot make a public key into private key. So there is a security which is inbuilt in the software, but the problem is that your public key and your private key can be hacked. You can go into a computer system, or some of these exchanges have been duplicated by hackers. So the look and feel of that website is the same. So they hack the whole exchange. So when you log in, you think that it is the exchange, but it is not the exchange. It is the hacker's website. And in the hacker's website, you can enter your public key and your private key. And if that happens, then that information is stolen by the hacker. And once he has your public key and the private key, he can literally log into your account and sell your cryptocurrencies and get revenue directly into his own account instead of the funds being transferred into your bank account. So every time you receive any money, a new address is created, and that address is the coin, and that coin stays in your wallet or your software. So you have to keep track of your transactions, and because they are time stamped, so each transaction is quite like separate from others. So these transactions happen so frequently, although you're not making the transaction, but the transaction is happening in a block. So it is quite possible that someone else sells in your block, and then it appears in your ledger, although there's no transaction happening in your ledger. So I've just given you an example of how an address looks like or how a coin looks like, and it's just something which I looked at in an audit file, in a self-managed super funds file. I've changed the numbers a little bit because it's not identical to a real number. But what you have to do is, if you're an auditor, there are websites where you can see the ledger yourself. So you'll have to ask, if you're auditing a fund, to check the audit trail of buy and sell. You have to check whether these funds whether these bitcoins or these cryptocurrencies were traded, or whether the super fund actually holds that investment on 30th of June or not. Now, what are the issues? Why are we worried as auditors? Why are trustees actually trying to get into bitcoins? The thing is that because they've grown from a dollar from 2008 to $300 and $1,200, $300 in 2011, and about $1,200 in 2013, and now to about $8,000 to $10,000. Now I'm talking about US dollars. There's a fear of missing out. So there's a lot of talk. There are a lot of clubs which have been set up regarding how bitcoins should be traded. But there are other types of cryptocurrencies like Ripple, Ethereum. There are about 1,400 of them. So, but we must understand there's no governments like ASX. There's a regulatory body. There's a legislation for these kind of exchanges. There's nothing. It's just like um, an open exchange where people can just go in and create an account. And there is an exchange called Coinbase, which is the most popular one. There are about 30 million accounts. And when in 2017 there was this big rush and prices were going crazy, they were setting up about 10,000 new accounts every day. So there are lots of stories of exponential profits, kids getting money from their grandfather, and they bought a cryptocurrency for $10 and they sold it and bought a car for $80,000. So there's all this talk. If you go into YouTube, you can just go on and on. There are lots of stories which people watch, and um, you know and it's why trustees want to do this or want to invest in crypto is basically there's a lack of trust in society, and we've seen it in the Royal Commission. The other day I was watching TV where they were showing AMP actually apologizing, saying, yes, we did make a mistake. The politicians, the banking, the financial industry as a whole, are corrupt or can be corrupt. So people think that we need to go over and above them and then get something which is, beyond politicians' control, and try and get some sort of a conversion into a local currency. So there are warnings from mainstream finance community because they obviously want their assets, their managed funds, their shares, their mining, and the banking shares to survive. So obviously there's a lot of mudslinging, and mostly from governments who rely on uh, taxes to survive. So what their fear is that these capital gains may not be reported, and there will be no way for them finding out a person or a super fund has actually gained in value. So auditor's role would be quite detailed, and I'm thinking that in a year's time, tax office will be checking auditors if they find funds which have invested in cryptocurrencies, to check what the auditor used, and what methodologies, what was the audit plan, what was the working papers, how they were recorded, and how the auditor checked whether the value was correct in the balance sheet. Now, as far as the value is concerned, it's we know in Aussie dollar $1 is equal to $1, but gold prices, share prices, house prices, and a painting was recently sold for 450 million. So it's in the eyes of the beholder. So you can't say the painting which was sold for 450 million would be the same value, whether it will increase in value or whether it will decrease in value. And then 30th June is basically a cutoff point for the auditors to say, okay, that was the members balance, because that was the a total sum of all the market values of all the assets of the fund. So it's quite a complicated issue which we are dealing with over here. Now, if you find cryptocurrencies and you're the auditor, there'll be a lot of things which you should be worried about, and a lot of things which you should be making notes of in your audit file. First is diversification. You will see either the super fund is 100% invested or quite significantly invested in cryptocurrencies. It's very rare you will find a fund who has invested some in property, some in shares, and some in crypto. Most of the funds have been created are low value funds like 30, 40, or 50,000 funds, and 100% or most of the monies, besides a small bank account, you will see would be invested uh, in cryptocurrencies. There is some sort of a layer which has come in, and these people are brokers, they are agents, they are offering crypto storage accounts, and they are issuing certificates to the trustees of the super fund in place of digital wallets. So what they are saying is, I'm a broker and I know that you bought, I'm an exchange, and I know you bought a digital wallet, and that money, because you proved it to me, came from the self-managed super fund. I'm happy to issue a certificate for your auditor, and this is basically to entice new auditors or new trustees to invest in these cryptocurrencies, rather than, I would say, that an auditor should trust these certificates as such, because these certificates have no meaning as far as legislation is concerned, because the actual ownership is the digital number, the digital wallet which that person has. Now, when you see, as an auditor, when you make your searches on these addresses, you can obtain ledger transactions and the quantity on 30th June. So that's a good part. You can see that that address actually has so much of quantity. But as an auditor, you will not be able to identify that address actually belongs to that person, because the wallets don't have a name, they don't have a title, there is no name, nothing, it's just a number. So the linkage of whether the money has gone into that number is where your problem is going to be, and that is where you need to identify and disassociate with your audit and say that, yes, I can see that money is going out, yes, I can see there is a number, yes, I can see there are so many cryptocurrencies, and yes, that was the market value on 30th of June. But that does not mean that they're related to each other, because there's no name on that number. And that's a big thing, because if there's no name, you cannot identify that particular account. So there could be an issue with separation of assets. So it's quite possible that number has some cryptocurrencies which actually belong to the members instead of the super fund. So it's a bit of an issue which you're going to face when auditing these funds. The other thing which worries me quite a lot is the valuation of cryptocurrencies. And if you look at the auditing standard 560, it says that although you are signing an audit report, signing off financial statements of 30th of June, but you're not auditing on 30th of June, you're auditing much, much later. So there could be a change from 30th of June, and if that change is significant, you have to obtain the current market value. So let's say if you're auditing a fund in December 2018, and if the fund owned one Bitcoin on 30th of June 2018, and the set of accounts show the value which it was on 30th of June 2018, but because you're auditing in December, and if there is a vast change, there is a very high variance in the value of the which is being shown, I guess you need to either ask the accountants to change the valuation, or if the accountant does not want to, or the trustee does not want to change that valuation, should make a note of it, and possibly write to the trustees in the management letter, perhaps even qualify your audit report because of the significance difference in valuation at the time of your audit. You should also look at the auditing standard in subsequent events, and if there is a sale of that investment at a different price. So uh, when you are doing the search on the ledger, you should look at the valuation, and you should look at the holding at that particular point of time as well. So that will actually tell you that whether a significant adjustment in the set of accounts is required or not. You should also look at your material levels, because you could have $1 million fund which has invested, say, $10,000 in these cryptocurrencies, and see whether the audit report really needs to be remarked or qualified or not, or just if you can handle that issue through a management letter. The next thing is the auditing standard relating to fraud and risks due to investment in cryptocurrencies. Now, because these are digital assets, it's not like a physical asset, it's not like gold, it's not like property, it's quite prone to theft by hackers. So, you need to identify this fraud in your working papers. And there is a delay of recording this information in this decentralized ledger system. So this is something which you need to identify as well in your working papers. And you should also, there has been instances where either the transactions were duplicated in certain times because the hackers were trying to manipulate these wallets, and there was times when these transactions had a zero balance. I mean, the holdings were reduced to zero. So I think you should draft out a management letter, a note wherever you see cryptocurrencies, so that you can alert the trustees that in future it's possible that some of the value may disappear from the super fund assets. Now, if you're a financial planner, you have to be very careful, because cryptocurrencies is again not a financial product. You should be very wary because there are a lot of fake crypto exchanges, and there's no asset as such. You cannot use it, although there has been some isolated cases where some people um, have actually used or accepted or have decided to accept uh, a cryptocurrency as part payment. Now, if you're an auditor, your fees may be, say, $700 plus GST. Imagine, if you were accepting $700 uh, as a crypto credit to your public key. So you could avoid two things. One is GST, and the second thing is that you could avoid paying income tax on that $700 which you have collected. So this is where the government are concerned. This is where the regulation is lacking. So if the client wants to invest in cryptocurrencies and you're a financial planner, you will have to make the correct statements according to your dealer groups. And I'm sure there's a lot of guidance from your dealer groups on the best interest duty of a financial planner. There is a ATO guidance paper, and they have clearly, and I'm going to talk about, and I'll give you the determinations as well by the tax office, what they've determined, that this is not money, it's basically an asset, but because it's not a financial product, it doesn't come under the ambit of the ASIC regulations and the statement of advice rules of ASIC and corporate law. Now, as an auditor, the first thing you should consider is the sole purpose test, whether it's permitted by the trustee, whether it's included in the investment strategy of the fund or not. Now, just a little bit of an advertisement here for us and trustdeed.com.au. Uh, because a financial planner wanted the power to invest in cryptocurrencies by trustees, we amended our deed sometime in January of 2018. So our deed, so if the existing deed is not allowing the trustee to invest, I guess you would be recommending the trustees to update the trust deed. And at trustdeed.com.au, our superfund trust deed has that permission. And We have also amended our investment strategy. It's just a plain vanilla investment strategy, but you must remember that the investment strategy has to be considered every year depending on the requirements of the members. Now, as I said earlier, that cryptocurrencies is being used for illegal activities in the past. Almost one third of all transactions are considered payments or receipts because of some drug dealing or arms dealing and things like that. So you have to be very very careful on how you look at these activities. Now, if you're mining, it's a very mining is a word which is used because all these 21 million coins are not up and running. The person who set it up obviously wanted to be rewarded, so it costs about $1,400 to mine, and it's not very easy to do. So it costs about $1,400 to mine one Bitcoin. So uh, if you are, as a super fund, mining Bitcoins and then selling them through various channels, then obviously it will be considered as a business. So you have to be very wary and check whether that is the activity the trustee is involved in. Now, there's a lot of hedging happening in the price of bitcoins, and if you're going to have a ETF of Bitcoin, or if you're going to have a derivative of a Bitcoin, just remember that SIS regulation 13.14 does not allow a charge over the assets of the fund. So this is something which you need to be very, very careful about. Now, you must always remember that it's cryptocurrency is just a number, and it can be an individual name when you register your account with the exchange, but that's where the names finish off, because after that it's all to do with numbers. And there was a case, an accountant rang me. It was a single member fund, and the fund had invested in cryptocurrency, and that member died. And the problem was that the accountant was aware that the fund has invested in cryptocurrencies, and the kids were trying to find out how they can recover, because it's all to do with password. And because the trustee died, it was a tragic death, it was an accident. We have a million trustees, and it's bound to happen. Trustees would be dying suddenly. So when they die suddenly, there would be issues because the other trustees or beneficiaries will not know that password, so that asset would be actually lost. So you, as a auditor, what must you do? You must get a declaration of trust, because somebody or something or some number is holding an asset of the fund. A declaration of trust is similar to somebody actually having access to the assets of the fund, which is not the trustee of the fund. And because that declaration of trust was not executed before that asset was purchased, you should be looking at getting an acknowledgement of trust, which is a similar document, but it has a timing issue, because an acknowledgement of trust is executed after the asset is purchased. Now, again, I'm advertising this a bit on trustdeed.com.au. If you look at SMSF tools, we actually sell declarations of trust, and we sell acknowledgement of trust. They're basically used, let's say, in property, because the Office of State Revenue does not believe a trust, does not register a trust in the name of a property. So what you do is you register the name of, let's say, the corporate trustee of the super fund, but then the corporate trustee is not holding the property in its own right, it is holding the property on behalf of the super fund. So it has to enter into a declaration of trust with the super fund. So cryptocurrencies would be similar. Now, the audit. What are the issues? I've picked up 5 or 6 issues, which are the main issues. So the wallet does not have a SMSF title on it, so there's no title, so there's some ownership issues. I've just discussed declaration of trust. Because it's just a number, so you have to think about CIS regulation 4.09, separation of assets. How would we know that number actually does not have purchases or sales which have been made by the member himself? And it's quite possible that assets could be mixed. And every transaction has a new address, but it is the same wallet which the person has. A person can have only one wallet because he'll be downloading it on one computer system and will have only one access, only one private key to his wallet. The second point is Section 66. Superfund cannot purchase cryptocurrencies from a related party, so he cannot contribute. A member cannot make in specie contributions like a deductible contribution into a superfund. And also, the superfund can't purchase an asset from a member. Only ASX listed shares or business real properties are exempted in Section 66. So if you see any transactions between the super fund and a related party, that could be an issue as well in your audit. The next is I've discussed a little bit on investment strategy. We have to make sure that it's reflected the Bitcoin or the cryptocurrency which has been purchased. You must also know that that cryptocurrencies is not cash, it's not collectibles. So the investment strategy must be considered every year. So you have to make sure that there is a new investment strategy, and if the asset was held on 30th June 2017, if the asset is still held in 2018, whether the trustees have considered it to be in their investment strategy to be an asset which they must hold. I've spoken about trust deeds, and there's another declaration if I was auditing a fund, because once the private key is lost, then technically speaking, the Bitcoin is lost, and the private key is held by the trustee of the fund. So, I'll be preparing some sort of a declaration, and I will be putting it up on online SMSF audit. I haven't done that, but I will be doing it. So when you're auditing a fund and when you see a cryptocurrency, it'll be a good idea to get the declaration signed by the trustee. And then, the next thing is all this trading, buying and selling of cryptocurrencies happening. Were all trustees involved in the decision making? That's a key too, which you must look at, and that declaration would cover that aspect of it. Now, another thing is, can a trustee acquire from the super fund um, as a pension one of the cryptocurrencies? And that's not possible, because all pensions must be paid in cash. They cannot be paid in specie. So only lump sums can be paid in species. But the problem in lump sum is that lump sums can only be paid in accumulation phase. And in accumulation phase, we know that it is not in the pension and not tax exempt. So if there is any cryptocurrencies being transferred to the super fund, it is a sale for the super fund. And if it is a sale, then there could be some CGT implications for the fund. Now, what is the auditor's viewpoint? What you should be thinking about when you're auditing. This is the actual auditing process I'm talking about here. You can view the public ledger, but you must have a public key. So when you're auditing a fund, the accountant or the trustee must give you a public key. And This third party verification is possible. There are many websites where you can view this public key, and actually I've seen it. It's quite detailed. You can actually verify the transactions. You can verify the dates when those transactions were made. You can see the running balance, but you must get used to the messy method in the way they record it. In fact, it's too good. It's like everything gets recorded at a certain time, and the time is stamped, and it cannot be fabricated. It cannot be changed. So I would highly recommend that auditors, when they get the public key, they verify it from not from one site website. They verify it from more than one website, just to ensure that the records which they're viewing are actual records. One thing to note is, because you're going through these messy ledgers, if there are a lot of transactions, it'll take you time to audit. And because there could be buying and selling happening in that account, the accountant needs to convert the market value on that day, and record any capital gain or capital loss. So suppose you've got 10 bitcoins, you sold 3. So you bought 10 at a certain date, that was the price. But when you sold 3, then you got a different price. So, but the price was on that day. So you have to check through that ledger of what price was obtained. These ledgers only maintain the quantity, they don't maintain the price. But I've seen some ledgers, some exchanges, they give you the extra amount column as well, so you can figure out what was actually received. The problem here is that there are some exchanges, so some of the super funds may open with a US exchange, and some are in Aussie dollars as well. So some, because they are brokers of the exchanges in US. So this could be quite time consuming. So you should be upfront with the administrators and the accountants that you would be doing a proper check, and that will take time. The other thing which worries me is your professional indemnity insurance. I don't know whether it'll cover the audit where there are cryptocurrencies. So it'll be a good idea to talk to your underwriters who have provided you this cover, and to make sure that you are not exposed to any liabilities in future. Next is your audit checklist, your working papers to prove that you've done your job well. If you're using online SMSF audit, we are adding quite a few questions, and cryptocurrencies would also be included. And those auditors who are not using an up-to-date checklist would be obviously exposed to some of these audit risks. Now, if a significant amount is invested, I highly recommend that you put comments in the management letter. So, because of the fluctuations in the price of that asset. We've spoken about the trust deed requirements, and what has to be, what has to happen. I've spoken about the separation of assets. I've spoken about the sole purpose test. And if you see that if the trustee has benefited personally, then obviously you would be lodging contraventions. I spoke to an auditor, and his opinion was that that cryptocurrencies are crap, and if a trustee has invested his money and there are other members in the fund, like multiple members, and if the amount of investment in cryptocurrencies is more than the member balance, the one who is making these decisions, to him, he is not a prudent person, and he would be contravening under Section 52 and letting the tax office know. The thing which I was arguing with the auditor was that if you do let the tax office know, what is the tax office going to do about it? Because basically the ATO has come out and said that yes, it's an asset, and a trustee can invest. So you cannot tell the trustee what to buy and what not to buy, or what where to invest or where not to invest. There's some future issues which I've identified, and this could be very confusing for superfund auditors. So let's say the superfund owns cryptocurrencies, and can it be used to buy an asset like property? Like there are isolated cases where the vendor of the property is prepared to accept cryptocurrency as a payment. So what if the superfund wants to get out of cryptocurrency as an asset and get into a different class of asset? So can they do that? So this is going to be a new challenge in the future. And again, if the superfund um, owns an asset, and can it sell an asset and get cryptocurrency as payment and not Australian dollars as payment? So let's say there is a property which is owned by the superfund, and the trustees decides to sell that property, and instead of getting Australian dollars for those for that asset, the superfund gets cryptocurrencies as a replacement asset. So that could be the next problem which we'll be facing. Now you must remember that cryptocurrencies do not pay an income. It's an asset. There's no dividend income. There's no interest income. And is it a good investment because the asset is just held for capital gain? So is it a good uh, investment for the super fund? I just want to warn you as auditors, this is not our role to decide whether it's a good investment or a bad investment. Although you can make a remark about it in your management letter, which I always do if I'm auditing a fund, if I see any gold or mining shares, because you don't get any income out of those funds, or there could be even property. You could be owning land. In fact, my super fund owns only land. It's a business land which the super fund bought some years back, and it's generated no income. And because it's not generated an income does not mean that it's not a good asset, because the land which I bought for 800,000 in Kellyville in New South Wales is worth $2 million now. So it's grown in value. The point which I'm trying to make out here is that if you see a fund and which you are auditing, which has invested in it, whether it is good for those members, whether they need that income. If there's a pension fund, the pension fund would need some sort of income to pay those pension payments. Last but not the most interesting ones, me as an employer, and if I want to pay the 9.5% uh, uh, 9.5% compulsory superannuation guarantee, can I pay it in cryptocurrencies? I see why not, because this is like being contributed in specie, so it's not a currency. So I guess the answer would be no, because it's not cash, and superannuation guarantee, the 9.5% compulsory super must be paid in cash by the employer. But I'm just thinking, going in future, whether the trustees would accept it as a contribution from an employer. Now, as far as ASIC and ATO is concerned, the determination you should look at is 2014/5, and where it was determined that it's not money. Any cryptocurrency is not a currency, so it's an asset. And at that point of time, I think the tax office was more worried about it being a property like an asset. And if it is an asset, the tax office was more concerned about generating CGT tax on those assets. So this is something which should be very clearly shown. It should not be. Now the next thing is it a current asset or a fixed asset? So that's let you let your accountant had decide that. Now the next thing is overseas transactions. We all know, because we are buying it in exchanges which are hosted in China or hosted in Russia or in the US, and any transaction must be reported to Austrac. So uh, we should be wary that these transactions do get recorded. And of course, we have discussed, mining of cryptocurrencies. Can that be considered as a business? So um, we know that this is happening, and we know when you audit a fund in 2018, you're going to face one fund, at least one fund, which will have a problem. And I hope today's presentation gave you a little bit of an insight of what is about to come your way. So that's the end of my presentation. I really apologize about the technical issue at the beginning with the sound, but I'm also happy that I was able to present today. I have a few questions, so I'm just going to go through um, them, and I know there are quite a few of them talking about audio, but I'm just going to miss them and then talk about other issues. So I've got a question from Sarah. She says, it is limited in supply, but how do we know this, and how can this be guaranteed? You're absolutely right, Sarah, because there's no documentation available. There are 21 million. If I was a manufacturer or if I was a producer, I'll produce as many as I can sell. So that's it's there's nothing out there. It's just hearsay. And I watched a lot of YouTube videos in preparation for today's presentation, and the people who are talking are the ones who want you to buy. The reason they want you to buy is because they want the price to go up, and they want the price to go up because they are holding to this asset and they want you to buy, and they make profit. So that's their motive. Okay, I have a question from Mohammed. He says there are tax differences between currencies and assets. As per definition characteristics of Bitcoin itself, the currency is not an asset. The category of Bitcoin described in asset as per 8 as an auditor, what would I accept as a Bitcoin as? Mohammed, this is an asset, so when you buy it, you have to exchange. If the money has been paid in US dollars, you have to look at the exchange rate, and you have to record and prepare accounts in Aussie dollars. So you'll be recording it in Aussie dollars, and that's going to be an issue when there is a sale. Again, the sale is in US dollars. You'll be converting it back into Aussie dollars. As I said, as an accountant, it will be a nightmare for you to prepare the accounts. I have another question from Mohammed. He says, what should I accept as evidences of ownership? This is where it gets a little bit murky, and you'll be provided with an address, and the address does not have a title. So I'm just assuming that you will get a declaration by the trustee to say that address is where the money was spent, and that money belonged to the super fund. So this is going to be really very interesting. And all those auditors out there would be thinking, I'm just going to lodge a contravention and let the tax office worry about it. I think it's a very good option. And depending on the exposure of the fund to cryptocurrencies, whether the amount is material or it's significant based on the total assets of the fund. And like I said, the funds which I have seen, they have invested 90 to 95% in cryptocurrencies. I've seen only one fund where less than 5% of the fund balance was invested in cryptocurrencies. So most likely, if you're auditing a fund, you will see that these trustees will not even approach you if they've lost money, because they've already lost money. So they'll have to spend money to prepare accounts and pay supervisory levy and pay audit fees. So there'll be lots and lots of funds which will not lodge, and that's going to be interesting for the tax office as well. But if you're going to audit the fund and if you've decided you're going to lodge a contravention, I think it's a very good option. At least it will protect your professional indemnity insurance, and it will protect your license as well. Okay, next is Robert. Uh, okay, good stuff, Manoj. But one thing that stands out is the time to do what you are saying. What you are conveying is interesting and best practice, but all those 330 auditors out there cannot in any way be doing through what you are covering. Wonder what they are actually doing re cryptos as opposed to what they say they're doing. Very good and interesting point, Robert. If you see a fund who has invested in cryptocurrencies and your fee is $330, I tell you, you have a problem right there, because when I looked at the fund and when I looked at a ledger, it took me 3 hours, and that was my first time to figure out what was actually happening. So that's where my $330 went, just by looking at the ledger and understanding the ledger. But in times to come, I'm sorry. That's my that's my mate. Sorry. Uh, just going to get her out of the room. Sorry, just one moment. Okay. So, Robert, you make a very good point, and I'll see what happens, and we'll have to see what the tax office comes up with very soon after 30th of June. Okay, next question is, can we advise on crypto without being a financial advisor? I think that's right, because it's not a financial product. You can, as an accountant, advise any trustee, but just be careful, because you have duty of care as an accountant. And if you look at my next presentation on the 8th of August, there was an auditor who was held responsible for loss of an investment. So, and the auditor being responsible is like very, very rare, and I invite everyone to book for that webinar. It's really a game changer as far as auditors are concerned. So just be very, very careful. Another question from Robert: will you be sending out a MP4 and slides read this seminar? Robert, what happens with all my seminars? They get recorded, and if you go to the website online SMSF Audit, you will see my previous presentation has been uploaded. So if anybody has missed it, they can always download it from there. Next question is from Nick. Would the mining be considered as a contribution by a member, since the super fund itself cannot mine the crypto? Nick, I don't know. I didn't think like that, whether it's a contribution or not, because money has to be paid up. So I guess we're more talking about whether it's a business or not than anything else. Um, so because it's so open and it's so new, I guess I didn't think like you are thinking here. So I'll let you make up that one. Next one is from Sabrina. She says, if the transaction is completed on the same computer, would you identify by use of an IP address and trustee signed declaration to verify this is true? I think, Sabrina, you haven't seen one of those ledgers. So it's not the IP address which is important, it is the wallet. And every transaction has a separate address within that wallet. So you need to have a look there, and once you're exposed to it, you'll probably see that IP addresses have very little meaning in your audit, will have very little meaning in your audit. Next question is from Terry. Oh, okay. Thanks, Manoj, for the amazing presentation. Actually, I enjoyed it quite a lot because I was watching lots of videos on the internet on cryptocurrencies. Okay, next question is Joanne. How can we verify the website address to check the currency holding is genuine? Very good point, Joanne, because if you log in, maybe it is a fake website. Um, I guess you just have to Google it, and if you find that it looks genuine, it's probably a 50% chance that it is. But I guess you just have to play around with it, and once you find the right one, you can go to crypto coin. I think that's probably, but it doesn't give you the public key, so you'll have to go to a few ones. Joanne, would you mind sending me an email? I know the website to look at, so I'll send that one to you personally. Okay, next one is Elizabeth. What about capital gains, particularly where Bitcoin held is used to buy Ripple or Ethereum? Each exchange is a cut event. Yeah, you're quite right. I've seen this happening as well. People buy Bitcoin, sell Bitcoin, and buy something else, buy another crypto. So, well, you've sold it, so that's a CGT event, and you bought it, so that's your new CGT event. So, it's going to be a interesting thing going forward, and you should only cross your fingers that you don't come across a fund which has invested in cryptocurrency. So you'll be lucky. Or there was another auditor who suggested that if he sees cryptocurrencies, he's going to resign as an auditor. He just doesn't want to know about it. So probably that could be another option as well for some of the auditors. I have another question. If someone doesn't have any wallet and an address and may change from time to time for system security, in that case, what should I take as evidence? Um, every person or anyone who wants to invest in cryptocurrencies needs to download a wallet. A wallet is a software, and inside the wallet is a number, and that number is your coin. So you have to have a number. If you don't have a number, you haven't invested. So just have a look at it. Yeah. Okay, next question is, sorry, yes, somebody made a comment about my pet, Misty. She's my companion in most days. She's quiet. Okay, I have another question from Mohammed. If someone doesn't have any wallet and address, I think I've answered that from. Okay, Mandeep, she got a question. As you have said, there is heaps of transactions in crypto in a year. Can we do this on revenue account instead of capital? I'm sorry, you can't, because the tax office wants you to treat it as an asset, as a capital item. So it cannot be treated as a revenue account. Okay, next is uh, a question by Signorina. She says, can you also please send me the details of the website? Yes. Anyone who wants to check, who wants the website address on how to check, please send me an email and I'll be happy to send you the website where I check. Next is Sabrina. Thank you very much. Oh, I've enjoyed your session and I only heard about Bitcoin. I will be looking more into this asset to be more wary of this. Good. And I look forward to next week's seminar. Okay, guys, thank you very much for being with me. I'm now going to end today's presentation. You have a lovely week, and I will talk to you again on the 8th next week on Wednesday, same time. Thank you. Bye for now.